Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by Benzinga Pro. I'm your co-host Joel Elconin, along with Spencer Israel, and we have Henry Gambell on the line. He's the vice president at Simpler Options. Henry, how you doing on this Friday the 13th?
Doing great, doing great. Thank you guys for having me.
No, we always enjoy your input on the markets here. And so what are you focusing on today?
Well, as you start today, there's a lot of moving parts into the way that we look at strategies for today. The most important is I think that, because of the past couple of days and really for the past 2 weeks or so, we've been very gently selling off. I think you got a little momentum behind that yesterday and, of course, some follow-through today with the S&P's down 5. But I think you really have to start thinking about, not the worst thing you could do here, in my opinion, is buy a put, because you just see the market kind of prey on emotion in both directions. So the incessant rally, obviously, you finally got the pause to that. So everyone that bought calls that didn't manage to get out is kind of sweating that now. Now you see people start to chase it kind of to the downside. And what will usually happen is that then we get a little bit of the bounce into Monday. If that can hold, a lot of times you'll just see that we trade sideways, shop around, and take advantage of people that are buying puts and buying calls. The easiest method to take advantage of that is just to shift from buying options to selling them, and that is one of the primary things that we'll focus on around monthly expiration.
Okay, so you short anything coming in or short calls? Hopefully you're not short
We
puts.
had a few small put positions from yesterday, taking that into the close today, and we're going to cover those right at the open, and then start looking to shift positions. So to, instead of having these few short positions like we spoke about, just kind of off the sell-off, looking for a tradable low today. So very few, very small short positions today. I think covering those at the open is the best way to go about it. More of what I've been holding has been a little bit more delta neutral type things and trying to work things around key psychological levels. So like Google, for example, that'll be one that I have an eye on this morning because it's gapping down into about 750. Google is one of our favorite bullish stocks at the moment because it's got a monthly squeeze. It's fired long. So I look at 750 and start to think, okay, if it's bullish to sideways, how can I best take advantage of that? And usually strategies like butterflies, put spreads can work as well. The thing with those is, of course, there's a little more risk involved. But I just think anything that you can do to try to take advantage of, selling those 750 puts is going to be the way to do it.
So tell me what a tradable bottom is.
Well, a tradable bottom to me is just something where, and by no means are you calling the bottom or anything like that. It's just a bounce that is enough of a sustainable bounce to allow you to get a position, because, of course, you'll see bounces all the time. You're watching a 5-minute chart, you can drive yourself crazy trying to find those little bounces. More what I'm saying is something where we think off of a daily chart, we can at least have 3 to 4 days of strength, and if not strength, just sideways action, and that will allow you to trade off of it. So just enough strength to get a position.
Okay, because I'm looking at it here, and help me out. I look at the daily charts, all right, and I'm looking at the daily chart of the S&P 500 here, and we had this just crazy move up, unexpected move by a lot of people here in October, and I'm looking at the daily charts here, and according to the daily charts here, I don't see any major support here on the dailies until you get to 200,750 to 200,850. That was a double bottom just back on the 21st and 22nd. I have an intraday low somewhere in that area, I believe at 2150. So, I might be covering some shorts this morning, but are you looking for like a today? Or are you looking for a low today? That it's protected on Monday, protected on Tuesday, or are you just trying to catch a falling knife today?
Well, hopefully I'm not catching a falling knife. And I do see what you're saying. It's an interesting perspective when you take a look at the S&P chart, because to your point, if you take the low that was made back on the 29th and then run it up into this, you've got a huge, people would tell you that your pot odds favor the downside. One thing that I think is interesting, and this is a little bit more technical, but if you take the decline that preceded this massive rally, you'll notice that in SPX, it was exactly 8 days. Well, from the decline that started last week into today, this will be the 8th day. Now, just like anything, there's nothing that's going to be perfect, but the way I look at it is if you can get time to coincide with basically symmetry in time and symmetry in price, just somewhere where you can get those X and Y axis to line up, usually it's a good enough area for at least a bounce. So to your point, and if you look at just basic technical support, I would agree that it's a little precarious down there. But if you think about the way that it's been moving in time, not to mention the fact that we're looking for this, pit bull low, whatever you want to call it, on Friday into Monday, and then also the ARMS index. I'm sure you guys follow the trend. Anytime you have a reading on that where you close above 2, which we did yesterday, it's usually saying the market is at least a bit oversold. And those are some of the various things we're looking to tie in for a bounce. Now, it's worth pointing out, too, I don't think stepping into SPY and trying to sell puts there is the easiest place to do it. I try to give myself spots that are going to be forgiving. So, Google is one. Facebook has been very strong. I like Netflix to the long side. So it's not saying you have to come in here and buy the market, the indexes themselves, but try to find the strongest pockets of strength. And then if indexes can at least hold their own, ideally those will do a bit better.
All right, we Downward Dog here in the chat wants to ask you about an Amazon short here. I think Downward Dog's been listening to me too much here. What do you think? I don't know, man.
Well,
what do you think?
The thing that I saw in Amazon, and this is, honestly, I would just say that if you were trying to play the short side of that one, it's over. When you had 3 days of consolidation, which what we had kind of last week into the end of the week, that high right there that high was 662.26. That was the level that I was looking to say, if there's going to be any type of opportunity to do anything to the short side, that was it. Since we got such a big break on that on, I guess it would have been Wednesday, where we gapped up into the new high, that key zone of resistance was, cleared in a big way. And then I just take it off my charts because I refuse to play something to the long side up here. But it's also, the NASDAQ has been leading the way. So why do you want to, you talk about catching a falling knife. Well, that's stepping in front of a freight train. And I think, generally speaking, I don't know why human nature wants to try to do those things so much, but I think try to avoid those types of crazy entries and, trying to call the bottoms, and instead try to focus on things that maybe aren't quite as radical, like Google or something else. But all I'm saying is that I think there's a lot to be said for times where you can just step away and say, I don't want to buy it. I don't want to short it. Thankfully, we've got thousands of other tickers to look at.
Great advice here. Downward Dog, I'm just looking at the daily charts here, and you did settle near the low there. You had a couple lows at 663 and a quarter and 422. So maybe if you could get a bounce there, look at that as potential resistance. And also when Downward Dog, when I look at stocks and they have these kind of moves, I don't necessarily focus on the all-time high, which could be a double top there, 75.96 to 75.64. But what I'm more interested in is the all-time high close, and that's 673 and a quarter, because that is what the big institutions will look at as far as the mark in their positions. So if you're using a swing trade, keeping an eye on that 73 and a quarter. Moving on here, I wish I would have listened to you last time. You were kind of bearish the oil market. Have you been doing anything in the USO or the crude oil market?
I try to keep my futures positions down to a bare minimum. My primary focus is options. And then I'll branch off into a few things in the futures market. For me, crude oil, and I guess this kind of goes back to a little bit of the mentality you were sharing, where when it came down into 44, I had a really hard time wanting to get short there. We did have a squeeze in it, pushing lower, which would suggest that you were going to get this additional downside move. But I just flat did not want to get short at 44. Obviously, that has broken, and it continues to push lower. The place that I've been focusing my futures efforts has been more in the euro. Because I think that's going to be, famous last words, but I think that will be a little bit easier move. I'm bearish to sideways a bit in crude oil, but for the euro, I think that is just a straight up bearish play. Now, of course, the tough thing, and anytime you get done listening to someone make these types of comments, it doesn't necessarily mean that jumping into it and shorting it right this second is the best way to do it. The thing that I'm pointing out, and one of the main signals that we follow, are these weekly squeezes in just situations where you have bigger than expected moves. The last time we had a weekly squeeze in the euro was right there around April of 2014. And you can see the decline that followed that signal. We've got the exact same thing that is setting up now. So I think playing the euro to the short side would be a lot easier than trying to really call crude perfectly. And I just try to get into those with small size so I can hold my conviction and then ride that down to, everybody's looking for parity with the U.S. dollar, and I think that's an easy target. After that, I think you may have even a little bit more downside, but I think that's just the easier market to be in right now.
Okay, all right. We'll keep an eye on that as well. It's looking kind of heavy here, holding up. Just trying to hold the bottom and the low of the move at 1.0473 here. That was back, as you mentioned, in April. We'll see if that holds up. Let's just go to some of the big stocks here in the index. Apple had that nice run after earnings, and now you're back. You're back under that earnings. Well, it closed, I believe, the day before at 14.55. Credit Suisse really got things going to the downside in this one. Had typically has been one of your stronger stocks. Are you looking for a long entry point here in Apple?
No, I still maintain the exact same bias that you and I spoke about the last time we looked at Apple, and that is, in my opinion, that weekly chart still has some very serious problems. You can see, and here again, you talk about you start with the daily charts, which I think is great, taking those and then stepping back even further into weeklies. I think it gives you good perspective, and it's a lot easier to kind of get your foundation there rather than getting caught up in like a 15 or a 30-minute chart. But what I'm pointing out is I feel like you've got a really clean kind of head and shoulders there in Apple from where it made that high at 134, then went on to make the right shoulder. I see all of that as being a big congestion area. Now, if it chews its way through it and gets up through it, okay, fine. But I will not play Apple to the long side until it can really shift that pattern. So, like I said, last time we spoke about it, I said it was a broken chart and I refused to buy it. Well, then it rallied straight into earnings. And fortunately, I didn't lose any money on it, but I didn't make any either. Now I think switching to strategies where you're playing it kind of range bound, maybe from 115 down into 110, I think that would be the most forgiving way to play it, but I definitely will not be buying it.
Sometimes the best trade is no trade here. Coming out of the chat here, what's the best way someone who has no experience with options to learn them? I'm sure this is a good question for you.
Well, in my opinion, the best way to start learning is to keep it simple and to start with small size. It's all too easy to step into options and get over leverage because they do offer wonderful leverage. It's a great tool once you learn how to take advantage of it. But if you're just getting started, just trade small. I do suggest, I don't think trading a demo account is really worth it because, the fills aren't accurate. You don't get a real feel for your emotion. So I trade real money on it all the time. But if you're learning it, start with one contract so you don't get in too deep over your head. And then also don't focus on the short term. It's all too easy to get in there and get yourself chopped up, rack up your commissions and everything else. Pick something like what we're talking about with this euro, like a weekly squeeze, where on FXE, I think if you go out into the February series or maybe even a little bit further out, just buy one put option and don't look at it again. That will give you a good introduction to options. It will, I think in the long run, hopefully make your life less stressful. And that's the way that I would try to introduce it to someone, just a straight up directional put on something, sit on it for 2 to 3 months, and really try to capture the leverage of that, ideally in your favor.
Right, and as you mentioned, looking for a bottom today, S&Ps have had a 6-point bounce off 33.50.
Well, like I say, it's anything can happen, but when we get done with this, and you can go back and look at it, like on the spiders or SPX, both of them show up very cleanly, where the decline that preceded this rally was exactly 8 days in time. We're exactly on top of it now. You've got your high trend reading that we're looking for. I think there's potential in it. There again, I don't think buying the S&Ps is the easy move.
Right. Definitely things to look at here. What about just going back, a little revision here, history. Going back to last Friday. All right, so you had the jobs number, which portends to some interest rate hikes, supposedly. Who knows what the December numbers are going to be like. And, boy, some of the financials really took off here. And if you were chasing them that day, I mean, you got tarred and feathered here. Pullback, looking like your Goldman Sachs, I think it was up like $6 on the day. It's given a lot of it back here. Do you buy that theory about, the interest rates are going up, I don't know, about a quarter point, if that's big of a deal, that, it's good? Are you looking at some of the financials here?
Well, I think that's a very tough thing to think about, and I think there's so much commentary around on, will they raise rates, won't they raise rates? I mean, it's obviously not in their best interest to do it, so I don't really see them doing it. But with that being said, too, I think it's so easy to devote too much mental energy to that decision, whether it's saying, even if they did or don't, we don't necessarily know what the exact reaction would be. Coming over and taking a look at the financials and Goldman Sachs in particularly, What I focus on a little bit more is here again, if you'll step back to the weekly chart, and I'm a big fan of technical analysis. So rather than trying to think about all of the if this, then that based off the decision, I just look at it and say off of that massive swing high where you saw the high back up into that was 218.77, and then that all the way down into the low of 167. So, a very big swing. We retraced exactly 618% of that. So to me, the psychology of the 618 level is very important. Obviously, since it came right into that, I just looked at it as a short opportunity. And then, you also step into it. And when it made that rally off that number, you'll notice that it was right into that key area of resistance. And then I'm also thinking, as it happened, I'm thinking about the November monthly expiration. You see a big, large chunk of open interest in the 200 calls there. And to me, that's just the perfect opportunity to sell those, because you're playing the other side of emotion. You're playing it directly into technical resistance. And that's the way I try to think a little bit more about trading these.
No, it's a good approach to it for sure. All right, just any other stocks like on your radar? We got a few minutes left here. We're on with Henry Gambell. He's a vice president of Simpler Options, trying to keep it simple for us. Anything else? Any particular setups and some individual equities that you might be looking at this morning?
Well, like I said, on the concept of keeping it simple, if I were to try and pick 3 trades, I would say the easiest would be FXE to the short side.
Okay.
An intermediate one would be Netflix to the long side. It's got a nice wedge pattern off the weekly chart, and it may take some time to resolve. So here again, just like I talked about with the euro, that doesn't necessarily mean that getting short today is going to instantly pay you. Buying Netflix today at 108 may be tough, but I like Netflix all the way down into 95, and I think it has huge potential for new highs. That's kind of the intermediate one that I think is a little more forgiving to play. And then the advanced one would be Priceline. Priceline had a huge drop-off earnings, but it has done nothing to change the pattern. You step back to the weekly chart, and it's still a perfect representation of higher highs and higher lows. So I think Priceline still has a ton of potential to the long side, and those are kind of the 3 main, if I were to pick directional plays that I would focus on. And then as far as range-bound plays, just 2 other places I think to think about into the monthly expiration. I'm playing Tesla range bound, and you can do it one of 2 ways. You can either do it with an iron condor, where you're trying to play, the higher probability of being outside those ranges, or a lot of times what I will do too is turn it into an iron butterfly, where you just merge those body strikes. You're still playing it very range bound, but you take in a much better credit, and typically that's a more forgiving way to do it. So those are my 3 directional plays. I think Tesla's range bound into next Friday, Google around 750.
All
That's
right.
kind of the main area that I'll be focusing.
Wow, a lot of great information coming from Henry Gambell. He's the vice president at Simpler Options, trying to keep it simple here for us. I really appreciate it. You touched on a lot of stocks as well as the indexes. We'll keep an eye on some of these patterns too. I kind of am getting itchy to cover some shorts here too. I'd much rather see the SPOOs down at 20.33.50 than 39.50, but we'll see what happens today. Henry Gambell,
All right.
vice president at Simpler Options. Thank you very much.
Thank you.